Hi and welcome back to today's More Report analysis videos on Friday the 20th of May with me, Richard Perry, market analyst at Hantec Markets. Let's look at dollar yen. We've still got this sort of breakout that we're holding on to. The Wednesday's FOMC minutes obviously helped to drive the breakout, but we're still holding on to that move. Nothing too confirmatory in terms, is that even a word, in terms of the upside break, but I think that we're still rallying within this downtrend channel, and you've got the breakout from this range, which was 130 ticks from 108.20 up towards 109.50. Breaking out through that implies 110.80. Now 110.80 is not only around about where this downtrend comes in today. 110.70. You've got the resistance of the 55-day moving average, which capped the gains in April, and that comes in at 110.35, which is basically where we are now. Also, the resistance from the old floor started to come in at 110.65, but generally speaking, around 111 figure. So you've got all this resistance that basically runs up to 111 figure. And even then, you've got the April highs of 111.90. So you've got quite a lot of overhead resistance that is still suggesting that this is a rally that is likely to be sold into, similarly to what we saw in April. So it could be that this rally starts to sort of lose a bit of impetus and roll over. Now the momentum indicators near term is still positive, so with that regard, you're still sort of fairly confident and of the bulls remaining in control. I mean, you look at the hourly chart and you would say, well, you're pretty much across the board positively configured. You only had a very brief breach of that uptrend, didn't you? That's basically now continuing. All these moving averages rising, momentum indicators positive, MACD lines nicely rising, sort of forming a low above neutral and then pulling higher again. You've got this breakout support 109.65 basically. This old breakout of 109.65 area forming new support, and then it's pretty much is all pointing towards the continuation of this near-term rally. But I think the big caveat is that you've got a whole load of overhead supply here in this sort of 110.60 to 111 area to really start to cap the gains again. And I think unless you saw a breakout above 111.90, which was that rally of the April high, I think you're still sort of in the realms of bear market rally territory. So you need to sort of be a bit careful of this one. So I wish you good luck in your trading today, and I will speak to you later. Thank you.